Business News, we're news for business people.
Good morning. You're watching Daybreak on Bloomberg Quint Live, India's first digital live streaming business news service, and I am Agam Vakil. First, the headlines. Asian markets tread carefully as focus shifts to central banks led by the US Federal Reserve, which is expected to hike rates later tonight. And retail inflation accelerates to a 15-month high of 4.88% in November, led by food prices. And factory output slips in October to come in at 2.2%. And Bharti Airtel sells 20% stake in its D2H arm to Warburg Pincus for $350 million. Now, US stocks rose on Tuesday amid growing optimism that Republican lawmakers would be able to revamp the corporate tax system. Bloomberg's Abigail Doolittle wraps up in this report.
Tuesday's Wall Street session finished in mixed fashion. The Dow and the S&P 500 putting in yet another set of record highs, but the Nasdaq, the tech-heavy Nasdaq, finishing down about 0.2%. In contrast to the Dow finishing higher by about 0.5%. Not surprisingly, then, technology is one of the down sectors within the S&P 500, one of 4 down sectors, led by big names like Apple, Facebook, and Nvidia. Facebook lower, as the company did say that it will be paying taxes locally as opposed to through its Irish subsidiary. Nvidia down, with Bitcoin down about 2% after recently debuting in the futures markets on CBOE, which initially caused it to surge in massive ways, but on Tuesday falling a little bit. Nvidia's chips are used in some of the cryptocurrencies, so it seems like Nvidia fell in sympathy with Bitcoin's drop on the day. Now, relative to the Dow finishing higher and putting in that record high, some of the top stocks there included Goldman Sachs, Verizon, and Boeing. Boeing gaining, in fact, hitting yet another all-time high after the company said that it is raising its dividend and also replacing a previous buyback plan with a new $18 billion buyback. Oil, on the other hand, down about 1%. Natural gas down even more, down about 5%, as a weather forecast for very cold weather has moderated to some degree. Gas traders not really liking that so much. Overall, when you put all of this together, not truly a risk-on or risk-off session, but again, it's worth noting new record highs for both the Dow and the S&P 500. In New York, Abigail Doolittle, Bloomberg News.
It's Janet Yellen's second last Federal Open Market Committee as chair of the US Federal Reserve, and there's nearly 100% consensus on a rate hike. It's actually what the Fed will say about the new year that's caught the fancy of investors. Here's Kathleen Hayes of Bloomberg News with all the details.
We know that a rate hike is expected for December. This is a 2-day meeting. It started on Tuesday. It ends on Wednesday. It's the last one of the year. It's the last one where Janet Yellen will have a press conference. And if for some reason the president decides to confirm Jay Powell early, don't think he's expecting that. Janet Yellen she'll step down once he is sworn in. That's what I'm trying to say. So a lot of interesting stuff potentially coming out of this meeting. First of all, rate hike. I think that's interesting. It may not be suspenseful. WIRP, WIRP, World Interest Rate Projections on your Bloomberg. Here you have it up in the corner. Remember, just a couple of days ago, they were at 98%, but boy, oh boy, everybody's all in. They're not going to bet anything but yes, rate hike in December. Now, what else is interesting here? Of course, it's a summary of economic projections. It's the Fed's forecast. Each member of the FOMC submits their forecast for GDP, unemployment, and inflation, and those are updated every 3 months. So the last time we got the SEPs, that was in September. This is December, so it's time to update them again. And importantly, what comes out of the SEPs is the dot plots. And the dot plots is where we could have a little drama. Because right now, markets are saying 2 rate hikes in 2018. That's up from just 1. They're getting a little more believing in the Fed's commitment to inflation and gradual rate hikes. But there's people or banks like JP Morgan, Goldman Sachs, who say you could have 4 rate hikes in 2018. So let's just kind of refresh our memory. Look at the dots with me. DOTS press go. And what you can see, here's the 2017 dots, very broad consensus in the second half of the year for 3 rate hikes. But when you look at 2018, here's the consensus for 3 in 2018 as well, but you can see it's much more diverse, much more divided. Chris Lowe from FTN Financial with us earlier said that he thinks, if anything, you're going to find a couple of people down here drifting up higher to the 3, maybe, but he said it would only take 3, see, there's 6, only take 3 to build a consensus, a small consensus, but a consensus nevertheless for 4 rate hikes. So that's, I think, why there is a very important amount of drama around this. And finally, of course, Janet Yellen is the last press conference, and we're going to want to get a sense of how she describes the consensus, the FOMC, as she, swan song, whatever you want to call it. We know that she's led them very effectively, and at least at the beginning when Jay Powell takes over, presumably he's going to walk in her policy shoes, at least at first.
Let's take a look at the Asian markets now. And Asian markets have been trading mostly higher as investors await the conclusions of the Federal Reserve's 2-day policy meeting. Bloomberg's Rosalind Chin is here with us for all the updates. Good morning, Rosalind.
Good morning. Definitely some bated breath here in Asia as we're waiting for that Fed Reserve meeting, as Kathleen was just talking about just now. So the MSCI Asia Pacific right now up about 0.12%, so a little bit more than 1/10%. I couldn't say that was too exciting over here. The market's generally looking a little bit mixed. Now we see that in Japan, the Nikkei and Topix both trading lower now. The Kospi, though, making gains. Now the Hang Seng and Shanghai Composite has just come online. And we see currently Hang Seng is actually making gains of about just over 1/10%. Shanghai Composite doing a little bit better than that, generally flipping over from yesterday where they both closed in the red. Now, I want to look at one particular stock at the moment, which is in Japan, Toshiba. Toshiba is trading up by 1.6% this hour, and that's partly on the news that it has come to an agreement with Western Digital on this legal dispute that had been hanging over them for some time, months long in fact. And essentially, Toshiba had wanted to sell its chip business to a consortium led by Bain, and that was because it had to recover some money basically made from huge losses on its nuclear unit in the US. So Toshiba is sort of being forced to sell its chip unit, and the problem with that was that Western Digital was trying to stop it from doing so. Western Digital had basically the two sides have made different accusations. Western Digital really trying to put a stop to this sale to the consortium led by Bain. But now it looks like the two companies have finally agreed. The pressure on both sides was really stepping up in the last few weeks. Western Digital now will be able to invest alongside Toshiba in two new chip plants in Japan, and also receive a guaranteed supply of memory chips. And Western Digital will be dropping arbitration claims that would stop that sale to the consortium led by Bain. So Toshiba moving higher, and of course Western Digital also traded higher in after-hours trade. And moving along to Australia, the ASX 200 is just about flat right now. But looking at Westfield there up by nearly 14%. In fact, it had jumped as much as 15% earlier in the session, and that was on news that it's being bought by a French company called Unibail. And Unibail is Europe's biggest commercial landlord, agreed to buy Westfield for about $15.8 billion, one of the biggest sales this year, definitely in Asia Pacific at least, if not the world. It was a cash and stock deal that valued Westfield at about 18% more than Monday's close. Investors obviously liking that. Westfield Corp up by 13.7, nearly 14% at this current hour. So we're keeping an eye on that. Back to you.
Thanks for that, Rosalind. We will be watching out for those cues. But what does this mean for India when considering the SGX Nifty is flattish right now? We have Darshan Mehta joining us to give us all the updates and what we can watch out for in today's day of trade. Good morning, Darshan.
Good morning, Agam. So nothing much exciting happening as far as the global markets are concerned, because they were rather flat in trade. Even if you're looking at the SGX Nifty, it's down just 9 points. So there seems to be pressure from yesterday, but not anything that would be of concern. It's just down just 9 points. Now, ADR is a mixed close because ICICI, Wipro and Tata Motors, all of them ended down close to 1%. What did well was Dr. Reddy's and HDFC Bank. Dr. Reddy's was up 2% because it had news of its own. HDFC Bank was up close to 0.5%. Now, as far as crude is concerned, Crude was down almost 1.5% yesterday, snapping the 3-day rally, but has managed to bounce back today. It's up almost close to 7%, 0.7% in morning trade. And the industry data shows that the US stockpiles have extended, and that is why that is causing the prices to move up significantly. It was very mixed close as far as base metals are concerned on the LME. The nickel was down 1.5%, tin was down 1.5%. On the other hand, zinc and lead were up in trade. The other metals were rather muted. Even China, it's rather muted because steel is down 2%, aluminium is down 0.7%. Copper and rubber are trading much higher in China currently. So not too much interesting cues coming in even from the commodity space. Gold is also trading muted in early morning trade. Now, as far as fund flows are concerned, FIs turned surprisingly net buyers yesterday on a provisional basis. They bought in 840 crores and a similar amount was sold by the DIIs. Nevertheless, FIs remain net sellers on a month-to-date basis. They've sold in 3,500 crores in the cash market, and DIIs have bought in almost 4,500 crores in the cash market on a month-to-date basis. Now, the Nifty actually snapped its 3-day rally. All the sectors ended with losses. What didn't do well were counters like, the India Wix, obviously, that surged 8%. So that is important to watch above the 15 level mark. FMCG, infra, as well as real estate. These were the three counters or sectors which took the maximum hit in trade yesterday. Apart from it, the Nifty was down 80 points. What contributed? It was basically the banks and some of the conglomerates. So HDFC Bank contributed 14-point downtake, ITC contributed 10 points, and ICICI Bank contributed 6 points. TCS, which had a good rally over the past few days, managed to give off most of the gains. Nothing much coming in support of the buying side. ONGC and Dr. Reddy's a little bit, but overall 96 points on the decline side, 14 points on the advance side, but a negative day for the markets.
And what are the FNO cues throwing up?
Yeah, so if you're looking at the FNO cues, let's take a look at the Nifty itself. Is down 82 points. So there was fresh short positions that were seen. The open interest build-up was close to 1%. The futures are trading at a premium of 24 points. Now, if you're looking at the Bank Nifty, the cut was even more. It was down 1% on high open interest build-up of almost 13%. So that's the trend that we're getting in as far as the Bank Nifty is concerned. The VIX was up almost 8%, coming in above the 15 level mark, so that is important to watch. So volatility will be higher. The PCR came down because call writers may have become aggressive and put writers may be shedding a little bit of positions of 1.29 to 1.26. Now, if you're looking at where the open interest distribution is, this is the total open interest. Here you can see the 10,000 call is where there is significant amount of support. So this is where the markets will look at support, and at lower levels there is shedding of open interest that is being seen on the call side. Call writers became much more active from levels of 10,300 to 10,500. So this is the open interest change that happened yesterday. Put writers shifted positions to levels of 10,000, so they expect that positions will come down. This is the open interest distribution. You can see that at levels of 10,000, this is the biggest support because put writers is maximum. It's close to almost 90 lakh shares here compared to the others. So you can see that there is strong support for the market at this level, and even at 1,000 and 1,100 and 1,200 there is support, and at 10,300 there will, from that level, resistance will come in. So it looks range bound with very heavy support levels coming in at lower levels. Now, in terms of some of the stocks that will be in focus, Oil India yesterday saw fresh shorts. Open interest build-up was 17%, so that is important to watch. The other counters you have to watch is Hexaware. Hexaware also saw fresh shorts on open interest build-up of 14%, so that one saw fresh shorts. And PC Jewelers saw short covering that actually came in. It was up almost 2%, but the open interest was down close to 9%. So overall, that's the overall cue that we're getting, Agam.
Absolutely, a lot of stocks to watch out for as we move into trade today on the back of those cues. But moving on, India suffered a macroeconomic setback on Tuesday with retail inflation unexpectedly accelerating to a 15-month high of 4.88% in November, and industrial production is slowing to 2.2% in October. Shraddha Babla is standing by to give us more details as to what the brokerages are picking up. Hi Shraddha, good morning. What are the brokerages telling us and making of these macroeconomic cues?
Morning, Agam. So broadly, both the CPI and the IIP numbers surprised the street, like you said, with the CPI numbers coming in much higher than expectations, while the IIP numbers coming in way below expectations at a 3-month low, for which IDFC has actually blamed vegetable inflation for that spike that we have seen in the CPI number. They say that the latest inflation print vindicates the continuing caution aired by the RBI on the evolving inflation trajectory, and now they said that they expect headline CPI inflation to remain higher than 5% for the remaining part of FY18, and they believe that this removes any chance of a softer monetary policy stance from the RBI. But having said that, they don't expect the RBI to raise the repo rates in the first 6 months of calendar year 2018 either, because they believe that the growth momentum is still not strong enough. You have a similar view coming in from Nomura, which says that the rise in core inflation, even after adjusting for house rent, it suggests that the broad-based price pressures are continuing even as the GST effects have faded away. Now, the below estimated IIP growth, they say, reflects a number of transitory factors such as front-loaded shipments in September and the early onset of festive season. So what they have to say is that broadly the data suggests an upside risk to their inflation forecast, and while they're expecting November IIP growth to rebound, they believe that the inflation pressures are definitely here to stay. But again, they're expecting a hold from the RBI, but they have cautioned that any continued rise in the core inflation number would be a risk to that status quo on RBI policy forecast that they have. You have Motilal Oswal, which says that since the RBI does focus on the headline inflation number, a likely reading that they're expecting of about 6% for Q1 FY19. They believe that will increase the odds of a rate hike when you go into mid-2018. However, for now, they're maintaining the call of a prolonged pause on account of weak growth and the nascent stage at which investment recovery is at. And they're also added that the union budget will have a key role to play here as well. So broadly, in their base case, brokerages are expecting RBI to continue to stay on pause while becoming watchful of the inflation trajectory from here on.
Thanks for that, Shraddha. And we will be watching out for whether or not that does have an impact on the rupee and the bond. And for that, we have Saloni Dhanuka joining us to give us an update. Good morning, Saloni.
Good morning, Agam. So the rupee yesterday broadly hovered in a narrow range of 10 paise, and it ended the day lower by 3 paise at 64.40 levels against the dollar. Now, on the macroeconomic data front, as Shraddha mentioned earlier, both retail inflation numbers and industrial production numbers surprised the market, wherein retail inflation unexpectedly rose while industrial production data came in below estimation. So this could pressurize rupee in today's trade. Now, on the global front, US dollar rose against other major currencies. It now trades above the crucial 94 mark ahead of the FOMC rate decision today. Now, also US 2-year Treasury yields touched a 9-year high as traders anticipate a rate hike today and then hikes in March 2018 and September 2018, according to a Bloomberg report. Elsewhere, the pound continues to trade under pressure despite a strong UK inflation numbers which came in yesterday evening. Now, traders do remain cautious ahead of the central bank meetings scheduled this week, including Fed, the European Central Bank, as well as Bank of England policy meeting. Now, coming back home, dollar rupee is trading at 64.55 levels against the dollar in the non-deliverable forward market, which indicates a weaker opening for Indian rupee in today's trade. Now, coming to the bond market, yield on benchmark 10-year bond ended at 16-month high at 7.19%, and mind you, the yield is on course for a 5th straight monthly increase on the back of higher bond supply, rising inflation, as well as concerns over widening budget deficit. And lastly, global funds reduced their rupee debt holdings yesterday. They reduced their debt portfolio by approximately 1,200 crore according to NSDL data.
Thank you, Saloni. But moving on to the world of commodities then, what can we expect and what is crude doing especially? We have Jayesh Khilnani joining us to give us more updates. Good morning, Jayesh.
Morning, Agam. So let me start off with crude oil prices, which actually slipped more than 2% overnight. That is for the Brent version, while WTI also saw a decline of about 1.5%. Now, two contrasting views coming in, wherein API is expected to, report the inventory data which has been declining for the last 4 weeks, and this week we are expecting a further decline of about 7.4 million barrels for last week. However, EIA on the other hand has forecast that the US crude output will be at a record high for next year. So two contrasting views coming in over there, and that's the reason we saw a slip in oil prices. However, in Asian morning hours, oil is actually trading up to the tune of about 0.5%. Moving on to the base metal space, we saw mixed close on the London Metal Exchange, where zinc actually rallied on the back of Glencore restart plans, which actually fell short of what the market was expecting. Now, aluminium prices are also hovering near the 200-day moving average, so important to watch out for those as well. The other base metals like copper, nickel and tin actually declined, while lead rose on the London Metal Exchange. Similar cues are coming in from the Shanghai Futures Exchange, where most of the base metals are trading mixed, but steel is a standout performer over there, which has declined more than 2%. Moving on to the precious metal space, not much coming in terms of the gold and silver prices. We have seen some bit of stability come about near the 1240, 1245 mark. For gold prices, dollar index has actually breached above the 94 level for the first time since November 21st. So, important to watch out for that, and of course, what comes out of the FOMC meet.
Thanks, Jayesh. We will certainly be watching out for those cues. But moving on to a Bloomberg exclusive, Reliance Industries is weighing an initial public offering for its mobile unit, Reliance Jio Infocom. And according to people with knowledge of the matter, the Mukesh Ambani-led company is holding internal discussions to list Jio as soon as, or rather as late as 2018 and as early as 2019. Bloomberg's Saket Sundaria sums up the details in this report.
Reliance has actually started preparing for an IPO for Reliance Jio, which started operations earlier this year. The company is waiting for Jio to improve its financial performance. More or less, they have decided on a timeline of 2019, early 2019 or maybe late 2018. These are all initial stage preparations for Jio to list, and the company has not decided on valuations or anything as yet. It all will depend on the market scenario and how Jio performs financially over the next year or so.
And Reliance Industries responded to Bloomberg's Newsbreak, saying that the report is speculative in nature. But staying with the telecommunications space, we also have Warburg Pincus, which is looking to acquire 20% stake in Airtel's DTH for about $350 million. Brokerages too seem to have a positive view on the deal. Let's head across to Sumit Sarkar, who is standing by to give us more details. Hi Sumit, what are the brokerages telling us about this particular deal?
So good morning, Agam. First, I'll tell you about this deal. Now, Bharti Airtel owns around 95% in its DTH arm and will be selling 15%, while another promoter group company will be selling the remaining 5%. Now, Bharti Airtel will be getting close to $263 million US from this transaction, and this deal values the DTH arm of Bharti Airtel at close to around 11,300 crore rupees. A few details about the DTH company of Bharti Airtel. Now, Airtel's DTH arm has more than 13.5 million subscribers. That is close to 20 to 21% of the total subscriber base. Now, it generated a revenue of close to 1,800 crore rupees, and it had a high EBITDA margin of around 37% for the second half of financial year 2018. The ARPU, that is the average revenue per user, was close to 233 rupees, and Airtel so far has invested close to 7,500 crore rupees in this DTH arm. Now, brokerages have given a thumbs up for this deal, as Macquarie says that this valuation reflects Airtel's strong recent performance in the DTH space, and on EV to FY17 EBITDA, it is at a premium of 2% to the combined Dish TV and Videocon entity. Morgan Stanley also says that the deal is valued at the deal values DTH business marginally ahead of their estimates, and the cash raised from this deal would help Bharti Airtel to fund its capital expenditure on the Indian wireless business.
Thanks for that, Sumit. But moving on to the stock of the day, we have Talwarkars, which has had a very, very good quarter, at least when it comes to the bottom line. But this is largely aided on account of other income. Let's head across to Nikki Mirchandani to take stock of what's really happened this quarter in Talwarkars. Nikki Mirchandani, good morning.
Hi Agam. Healthy set of numbers coming in from Talwarkars. If you look at the revenue, that's a 10% growth that we're looking at for this company at a number of around 97 odd crore as compared to 88 crore in the corresponding quarter. Net profit for that matter, that's risen 25% in this quarter on year-on-year basis to a number of 36 odd crore. a good healthy set of performance coming in even on operating front for that matter. EBITDA has risen 15% at a number of 60 odd crore. Margins have expanded to 62% as compared to 59% that we've seen in the corresponding quarter. So what has led to a good set of numbers will be your higher revenue along with your decline in your employee benefits expenses, which has led to operational efficiency. Now, employee benefits expense as a percent to your net sales has come down to 13% from 16% that we've seen in the base quarter. Also, as you just mentioned, that we've seen a sharp jump in other income, and along with your operational efficiency, which has led to good growth on bottom line front, other income has jumped 5-fold for this company to a number of 6 odd crore as compared to nearly 1.3 odd crore in the corresponding quarter. The company has added, the fitness chain operator has added 47 centers in India for this quarter, reaching a total overall centers, 78 centers for this quarter. It's added 12 centers just itself on 1st August 2017. To give you a quick rundown of what the company is, as I just mentioned, it's the fitness chain operator in India with a market capitalization of around 939 crore, and in terms of stock performance, the stock has fetched a return of more than 20% both on YTD basis as well as yearly basis. Back to you, Agam.
Thanks for that, Nikki. But what are the other stocks that we are watching out for on the back of news? Let's get in Shraddha Babla back in to give us that list. Shraddha, what do you have for us?
At the top of the list is Interglobe Aviation, where the promoters are looking to sell up to 79.52 lakh shares, and IGE Mauritius is looking to sell about 32.40 lakh shares via an offer for sale. Now, the floor price for the OFS has been fixed at 1130 per share, which is close to 4% discount to yesterday's closing price. So we could see some negative reaction there. Yet another QIP that is open, and that is of Syndicate Bank. Again, floor price fixed at 88.57 per share, but that's a 4 to 5% premium to yesterday's closing price. You also have Asian Paints, which has acquired 100% stake in Reno Chemicals for 159 crores. But broadly, this is more to do with using the company's land and building and acquiring infrastructure. Grasim Industries, where they have said that they will pay 600 crores to Century Textiles for rights to control the filaments yarn business, and that will be for a period of 15 years. On the back of order wins, we have Punj Lloyd. They have backed an order worth 276 crores from GAIL India, and a joint venture of Punj Lloyd has also won projects worth close to 1200 crores in Myanmar. NBCC, it has secured new business worth $23 million for building social housing units from the government of Mauritius. It's an incremental order, so you could see some positive reaction on the back of some of these names and due to the order wins that they have.
Thanks for that, Shraddha. But moving on to the big brokerage calls of the day, we have Saloni Dhanuka joining us back to give us that. Saloni, what do you have?
So, Agam, first up we have JP Morgan on Reliance Jio listing. Now, this note comes after Bloomberg reported that Reliance is considering listing of its 100% telecom subsidiary, that is Jio, in early 2018 or late 2019. Now, they believe that if the listing were to happen, it will turn positive for Reliance, as it would allow market price discovery for Jio's digital service model. Now, Jio listing could potentially upstream cash flows for the parent company, which could turn positive for Reliance overall. Now, in terms of performance, Jio has been steadily increasing its subscriber base with its lucrative offer, thereby increasing tariffs as well. JP Morgan expects Jio to be profitable in third quarter of financial year 2018, which is ahead of their planned schedule. Now, Reliance Industries stock price currently value Jio at 13 times its FY20 EBITDA. So overall, stock should remain supported in the near term on this news flow. Now, second up, we have HSBC on Jubilant FoodWorks. HSBC maintains their hold rating on the stock. However, they have hiked the target price to rupees 1640 from 1250 earlier, thereby suggesting a potential upside of over 30%. Now, the hike comes after the stock price nearly doubled on a year-to-date basis in this financial year of 2017. They believe that the company has benefited due to increased focus on productivity gains, innovative technology, as well as improved margins. Now, the company aims to continue to optimize cost by offering everyday value deals to their customers, and this is working well for the company. However, they expect the company now needs to compound its earning by 20% for the next 15 years beyond 2020 to actually justify the stock price, Agam.
Thanks for that, Saloni. But there are also a few stories that you should consider reading on website bloombergquint.com. Here they are. And in a setback to India's energy giant Adani, the newly elected Queensland government has vetoed a plan to give the $900 million concessional loan for the construction of a rail line in the controversy-hit Carmichael coal mine project in Australia. But that is all the time we have on this show. That's a wrap on this edition of Daybreak. All you need to know is up next. Stay tuned in the Bloomberg Quint.